Hey,
Hello, how are you?
fine. We sure had a turnaround.
That's yeah. I'm gonna say it's borderline exhausting.
Yeah, it's so incredible, and it's actually tough because you do get a little nervous about what's going on because all of a sudden you can't read it like you normally can.
Well, that's the thing. We kind of joked around that we're in day trading mode right now. Basically saying
Right.
we're old school, blah blah blah. But how do you have any confidence? 2 days ago, it looked like the world was falling apart. Now, 2 days in a row, we have the exact opening you would expect after like a gap higher sell off, and it looks like we're going to collapse 2 days in a row. We don't even come close to collapsing. As a matter of fact, we close on the highs.
Right. And I think this was an engulfing bar. Right?
Was it? I don't remember. I know it was a
Oh no, it
big
wasn't.
doji at the
No,
top.
it wasn't. No, it was a higher high and a higher low in a doji.
Okay. Yeah, well, pretty close, but
Hmm.
um look, I mean, we got almost two consolidation days, but we certainly didn't expect two consolidation days with buying at or near the highs at the end of the day. And yesterday we kind of wrote it off a little bit for Yellen, and I know
Right.
I knew there was some more news today, but enough to completely negate all of the selling from the two prior days.
I know. I don't get it. It's also beginning of quarter. Now, this is my other excuse for the market. It's beginning of quarter and beginning of month, and the funds they can't be in cash. Their customers don't want to see cash. So, did they buy in today?
I guess.
That
I
wasn't as good
don't
as
know.
mine.
Look. I mean, we gapped up again this morning. And here's the thing that really, for me, threw everything off. Again, we were talking really early in the morning, saying, "Are you kidding me?" With us up at 193.50, which is essentially another gap in the spiders this morning, and then we
No.
sell off almost $2 before the market opens. So it's like, okay, we're getting back to normal, like between 9 and 9:30. Basically getting to the point where like, okay, so here comes the selling. This morning's gap was whatever, and that doesn't materialize.
Yeah.
The, it is pure day trading mode right now. Pure day trading, and
No, if you sit at your desk and you do watch and you know your levels, you can make money. I did say in the room and kept saying, I like Facebook. I mean, Netflix. Netflix is acting well. Netflix held that 102. It never fell apart with the market when the market looked like it was going down. Netflix held. And now Netflix closed on over 106. And it blew right past that 105. It did pull back a little bit, but it got right through there.
did you see Tesla?
Yeah, and I did. We were short Tesla. I mean, I think Paul actually told me thank you because yesterday she said she was looking to buy it because it looked like Netflix before the breakout.
She was
And I was
actually
like,
short this pullback here, right? I remember she was like getting as this was starting to come down here.
no, but then yesterday she wanted to buy it. She goes, doesn't this look like the same pattern as Netflix before it took off? And I said,
Oh,
no, it doesn't look at all like it. I said, let's look first of all where this is in a downtrend. I said, second of all, it's below the 50-day and the 20-day. Look at where Netflix was trading before it took off. So then she got short, and so she did say thank you to me today.
oh, nice, very nice. Yeah, I thought I remember her saying she went short this morning.
Mm,
Maybe it was a different stock. So
yeah,
Netflix actually hit the target they were talking about this morning. I didn't expect it to trade a dollar through the target, but this
yeah.
was a big level. We were discussing the upside target was 105, and we're maybe looking if we had a bullish day, and obviously the afternoon took off. But that's the kind of uh, surprising price action, the viciousness of the stock going up over $3 in an hour after not doing anything for 4.5 hours, or whatever, how many
Right.
hours that is.
Yeah.
Um, so again, what does that put on tomorrow? Because it's very challenging, in my opinion, at this point to have an opinion for tomorrow based on where the market closed. Do you have one? I don't.
You know what? I actually think we need to stay in like you've said it before, cash preservation, no, cash preservation mode and trade what the market hands you. I'm telling you, after these 4 days, after actually these last 3 weeks, I can't tell you where it's going to open tomorrow. I can't even begin to guess where it's opening. And I know that probably sounds like an excuse, but it also Facebook. I'm hoping everybody, I said 90 was the buy and it's closed over 91. So you could get at least $1 out of that one. But you know what? Now I still have my VIX calls, so I could hold stuff,
Mhm.
against the VIX calls. But I'm telling you, this is definitely a day trading market, and we do get trades every day.
Yeah.
But I have no idea where this is going to open tomorrow. I honestly don't.
Which there's two things there. Number one is that's scary for both of us to say that, because that's really our strength with putting together the pieces of the market and saying, okay, we're in a nice flow. Here's what we expect on the open tomorrow, and literally building out scenarios what we expect to happen. But another thing that we've been talking about every day, which is super bizarre, is the better trading in the last 2 hours of the day when the morning is mush.
Yes, I totally agree. And this afternoon gave me, though I wasn't too bad because I had Netflix and I did get into Tesla short, and then thankfully when it looked like it was at that, when it broke the 240, because that was support, and I made $2 on it, but I covered it right away because it did not. It looked like it was finding support there, so I'm glad I did.
So obviously we want to keep an eye on the financials to see if they're participating. And first thing in the morning, they were strong when the market was selling off a little bit, or at the very least, the spiders were staying below the open. Then the market kind of went into a range. The financials sell off, and then the market rallies, and then everything rallies.
Yeah,
it's
totally
just
amazing.
it's really really disconnected, to the point where you can't put the pieces together because the pieces are it's like they don't fit right now.
Yeah,
For
I
lack of a better way of
absolutely
putting it.
100% agree with you. And that's why I kept saying to myself, just follow the price action. Just let and that's why I got out of Tesla. I don't care what it was telling me. The price action said, you know what, here's, it's showing you that buyers are coming in, get out.
Yep.
I totally 100% only was going by price action.
Now let's put that in context. First of all, it could be easy for somebody listening to saying, "Oh, it's challenging," like we're getting our head handed to us. That's not the case. We're pointing out that you really need to work your butt off to be on top of this. There's no slacking. There's no putting a stop loss in and going to watch Oprah. Whatever. I'm dating myself, but you have to be all over this market. You can't leave the tape right now. We are not in a market we're clearly going up, clearly going down. We don't even know what we're doing right now, hour to hour.
You know what? That's 100% right. And the biggest thing there, I think, is you can't leave, because you know what? In a minute, this thing can turn on you, and you don't even know. And it's not like news comes out or anything.
Well, look at Goldman here, a $1.50 rally off the lows.
Yeah. So really, you can make money, and you can, but you have to really stay with it.
So let's put it in context for everybody, Mary. Because obviously, the cover here. I'm not really joking, but another day, another doji, another day where small body, big trading range, we're all over the place, and just to put that in context, we have to keep going back to the SPY, because a lot of people use, whether it's the ES or the SPX look at the amount of dojis and get 1, 2, 3, 4, 5, 6, 7, 8. Well, not that eight dojis in roughly 11 days. That's a lot of indecision.
Yeah, I don't, and I think that's because so the market gets whipped around like it does, and I think it's extremely difficult. You can make money. It's not that you can't make money, but you have to be so disciplined, and you can't. You know what the thing is? This isn't a market you can make any mistakes in.
No, well, we actually we've been a little bit over the top with telling you, we're in a capital preservation market, and we're trying to protect inexperienced traders. And I'm not saying anybody in particular is inexperienced. It's more like giving wisdom in case it's not in the front of what somebody might be thinking. Because let's face it, a lot of people come into the market, say the market opens, I have to do something.
Right.
Look, we'd love to be doing something all day, every day. You'd love to be sinking your teeth into a really obvious long or a really obvious short. But if what we're saying to everybody is, we're not saying don't trade. We're saying if it doesn't make sense to you, it's okay to be in cash. There's no reason to throw money away because the market's open.
Right, 100%.
So taking that even a step deeper, you've mentioned here just in this meeting already a couple of times, I'm trading, I said day trading mode. You said trading just nothing more than the price action. We have to give that context, so whether you're trading 2 days worth of price action around the previous day's high and low, whether you're just trading the most recent candles and push down, and this was a failed test, so now that means something. Does that mean you get long? I don't know. Maybe you wait till you get above the open. See, this is the part here. It's like it rallies $2, but it's this entire move. It's still below the opening price.
Right.
So if you're having a hard time, or if what you're finding right now is challenging, you have to work your tush off right now to say, I need to be stock specific. Best case scenario would be industry specific, where you have, again, we talked about the ags the other day. We have CF, Monsanto, and those guys. If they're all doing the same thing, at least you could lean into them a little bit. Or like wind, for example, has been a really, really weak stock for a long time. So you could take a look at wind, MGM, LVS, and get a feeling from a sector, because that is doing the same thing and doing it with consistency. Don't worry about being in a lot of positions. In fact, don't even worry about taking too big of a position right now if you're not confident. But if you are, this is the type of trade, the ags, this stuff right here. Financials, not so much, but work a little bit harder when you're doing it. Again, I'm implying somebody's not working hard. Work hard and find the trades and only stick to them, because we're not really in a tape where you say, oh, look, I got a signal. I'm going to trade this stock that I haven't watched in a week because, my alert popped up. It's not that tape right now.
Right. I totally agree. It's very, very bizarre tape.
Look, I'd rather we were honest with everybody than be like on television. Everybody say, oh, I made so much money today, and all I had to do. No, that's not the tape we're in.
Right.
So here's the map of the SPY after yesterday's pretty aggressive move to the upside. And again, the Yellen afternoon, let's just call it Yellen spoke and the market rallied at the end of the day. Put a label on it. And here, obviously here's the move, which is almost eerily similar to what we got today, except the SPY was much, much lower yesterday before it finally rallied and kind of like settled here just above the opening price. So again, we had yesterday's gap higher, closed on the highs. We kind of expected a move higher, but we were actually all the way up here pre-market after after being all the way down here. So $6 from low to high, over, maybe even more than that. So here's basically the call for the day. SPY continues to alternate between yay and nay, driving a lot of ES futures traders crazy. Now, obviously, I'm talking about ES futures in sync with the SPY. I understand that the ETF and the futures are different. I hope everybody don't send me any hate mail. Okay. It's challenging to sink your teeth into a long or short right now, which everybody I'm talking to right now is saying the same thing. All right, with something more than a longer term expected than day to day, because that's what we're talking about right now. Right now, you're trading yesterday's high and low, today's opening price, and how the stock is trading this hour. And you just saw that in multiple stocks where there was a solid downtrend intraday that reversed to be a really strong uptrend that could have been tradable if you were on top of your game. And again, if you switch to the hourly candles or you're just moving averages, or whatnot, or something along those lines. So interestingly, we did point out Apple for multiple reasons in the morning. So yesterday's strong close, again, this is in the market, indicates a higher opening. And again, I think I wrote this at 6 a.m. Did not expect another gap like this. Kind of joking trade what you see, because you and I were talking about that at like 5 o'clock. Yeah. But Apple inside day yesterday should have been viewed as neutral to weak price action with the strength of yesterday's tape. And we could take a look at what Apple did as the day unfolded. It actually did trade weak right up until 11 o'clock, and then just found a bid. Inside day breakdown takes out these most recent price action. Looked like everything was lining up for it to get down to this 106 and change level, and just found a bid with the rest of the tape. So you have a weak stock, inside candle, breaks down, does exactly what you would expect it to, and then actually rallies almost actually $2 off the low after it was setting up as what, again, not a awesome downtrend, but certainly a breakout to the downside where all the moving averages are in the right order. So again, we're pointing out why you need to really be on top of your game right now. We're not saying don't trade. We're not saying don't trade aggressively for whatever context that is for you in particular. But there's also going to be a lot of other people out there sitting there pulling their hair out of their head saying, is it me? Am I missing something? It's a little bit more challenging of a tape right now, and you have to make adjustments. Again, I'll use the same, I don't know if it's a metaphor or analogy, whatever you want to call it. It's the same thing as driving on the road. Just because yesterday you drove 55 on the Long Island Expressway doesn't mean tomorrow you're on the Long Island Expressway at the same time. You're going to close your eyes and drive 55. It could be stop and go traffic. So you have to pay attention to the tape. And as you said, Mary, you're going to read the price action and just trade that most recent price action. So please heed our call. That is a little more challenging tape right now, and be disciplined, especially in your risk management and your stock selection.
Yeah, I agree. And know that you can make money, but you just have to be so disciplined to make it.
Yep, and it's also a very difficult tape to be adding to positions right now.
Yeah,
It's you see these trades right now where they're pushing down, doing exactly what they're supposed to do. It looks like the nice spot to add to the trade. You add to the trade, now you got your second piece on, and you see what happened here in the spider. For argument's sake, I mean, you could have made a case for this is a really really solid good spot to add. Other than the fact that we were near the previous day's low, we pushed down. We spoke about the opening price multiple times. Like, oh, can't get above it. VIX is bouncing. Push down, flag, push down, flag. All right, load up on the short side and get that. So that's why we're saying you have to adjust your trade management to what's available in the tape right now. And right now, the tape is not saying to add aggressively. And again, we're talking about day trades. We're not saying add aggressively where you plan on holding the trade till next Monday.
right.
So here is the end of day SPY chart. So again, from yesterday's bright green to today's, I guess you'll call that mud red. Not quite blood red, looks more like mud red. A few pockets of opportunity. These guys have been strong for just a couple of days, even though they're mostly in downtrends right now. Amazon actually bounced back, but if we look at, again, the size of the box here is the market cap. Amazon has been in a pretty defined range that 520, I believe, 520 to 539, if I'm not mistaken. And now, actually, after selling off hard from just above 539 down to below 500, it's no coincidence that we get right back to that 520 level. It's not shocking. The numbers are what they are. That they're hard and fast. This has been the line for how long now? Going back to July.
Yep.
So that takes us now into tomorrow. We can show some of the stocks that we had in the list. You can see the size of the list on the bullish. Now, just to give a little context, this list right here is actually filtered down. I wouldn't even say watered down at this point, but you try and tweak it so you have some setups. Like normally, I'll set it for 2 million shares in an average true range of $1.50. I've had to lower the average true range just to find some stocks that are actually in uptrends, and even doing that to call out stocks to trade on the long side, because a lot of traders in our rooms don't like to be bearish. Even doing that, it's still hard to find longs, which makes the fact that the size of the list on the short side, which is still pretty big, all that more bizarre for how the market is holding up when there's still probably 5 or 6 to 1 setups on the short side.
Yeah, I totally agree.
So I'm not in a position into tomorrow. I haven't been holding a position because I've been waiting for that opening window to play itself out. I'm not saying anybody else should do that. I'm just saying how I'm trading, and I think it's a little challenging to have confidence holding a position overnight right now, unless you're seeing something like we went over Wynn or one of the ags last week or earlier in the week that clearly are in downtrends. But the stuff on the upside, we'll go into what has been the stronger the UA. Let me actually take this off of the intraday chart here. Obviously, much longer term trends. This is the kind of price action that all of a sudden a stock that was one of the best 52-week breakouts gets, comes back pretty hard, and now it's trying to reestablish as a long. So you have to really look at the charts and be like, wow, it's in the phantom zone between the 20 and the 50. Is that really a long? You have to make that call now. It's not obvious. And when you're making a call on whether something's a long or short, again, I'm not saying it's a short, but it's a suspectable long with all that resistance above and the fact that it came in that hard.
Right, exactly.
So that's what's making it a little challenging. So if you're listening to this, you're at home and you're paying attention to it, especially if you're trading at home without somebody to speak to. Look, I've been there. It can absolutely feel like you're in an ocean by yourself, and you're like, what am I missing that I'm not on top of this market? It's a little bit more challenging tape. And, that's something also that we talked about this morning. Would you rather learn a tough tape or an easy one? Monetarily, obviously, you'd like to learn an easy one. But if you can hold your own in this tape, you are light years ahead of anybody else who is just starting out right now or finding a little bit challenging. Because if you understand what's going on and you could read when it's challenging and read when you can loosen the reins a little bit and be on, and hold a little bit longer, maybe even consider adding when you get a 2-day breakout or a breakdown and it's following through. If you can recognize those conditions, because that's really the point that I think we're trying to make, Marion, is we're not saying don't trade. We're trying to point out tougher conditions so that you have a structure to say, I understand what great conditions look like, and anything away from great is tougher. And then you have to make tougher decisions how you want to be involved with those tougher conditions.
Exactly. I think that's well put.
So I think we'll call it a day on that, Marion. We'll pick it up again in the meeting tomorrow, and hope everybody was on top of their game today, and we'll see you tomorrow.
Okay. Good night, Pete. Have a good night.
Okay, you too. Bye bye.
Bye.